Hello traders, welcome back to the channel. This is Vishal and let's start today's weekly sectoral analysis. And I'll be starting with the monthly time frame chart. As all of you know that I have a habit of doing top-down approach. First, I generally analyze the monthly time frame chart, then I go to the weekly chart, and then I generally go to the daily time frame chart. All right. And as we can see in front of us, we have the Nifty Futures monthly time frame chart. In terms of state of trend, we can see trend is up. Price is trading above both of the moving averages. All right. And I think things are pretty fine in RSI and even in the MACD. Let's have a look at the weekly time frame chart. In the weekly time frame chart, what we can see over here is a very fast uptrend, a small dip, a sort of confusion between bears and the bulls. We have a hammer over here, then we have an inverted hammer, then again we have basically a bullish candle, and then we have again a bearish candle. What is this exactly happening? What has happened over here is, first we need to understand this entire rally was extremely fast. Then what happened in this 4 candles, 1, 2, 3 and 4, this was purely consolidation, which means making money over here was not very easy. And then we have this sudden red candle. Why is it? This sudden red candle is due to a resistance, a psychological level, 18,000 or just above than that, 18,000, approximately you can say 18,150. It is psychological level because this was a high which was made in April 2022. So this is the reason why we saw a sell-off today. Now, apart from the sell-off what we saw in Nifty, there are few other sectors which are responsible. I'll come to that in the later part of the video. Now, there were couple of supports which I have been sharing in the last couple of days. The first support I had shared on Twitter was somewhere over here, which I had also shared in one of my YouTube videos, I think last to last video. All right. And from there, we saw we had a gap down, a sudden rise, which I think took everyone by surprise. And then after that, I was expecting a little bit of consolidation, probably not a breakdown or a breakout, but sideways move, which we saw over here. This was not a very big red candle in comparison to this particular candle. So when this candle did happen, I thought, all right, we should wait and watch, and then probably we should, trade. We should not initiate trades very fast, because on this day, I had clearly told that after this day was completed, I had clearly told that it is not a time to initiate trades too fast. And I think market took everyone by surprise, probably even me. And then today I had shared this particular support band on my Twitter handle also, from 17,700 to 17,610. And there is one more support which is over here, which is around at 17,528. And there is one more volume bar also, which you cannot see over here. It is close to 17,550. So according to me, 17,700 to 17,550, this is a pretty decent support. Even this trend line, if you can see over here, it is a pretty decent support. Now the question is this a reversal of an uptrend or something like that? According to me, the answer is no. This is not a reversal of trend, and many people had this particular trend line on their charts. Even I had this particular, but the importance of this trend line is, I think, now vanished completely. The reason for that is many people would have thought that if there is a top over here, then we could come back down over here. All right. Whether we will come back down over here or not, it's a future question. But the importance of this line for me is not anymore. The reason for that is multiple times in daily time frame chart, and once I think in the weekly time frame chart we closed above it, again we came down. When multiple time it happens, the validity of that trend line diminishes. So as far as we are above this particular level, it's fine. If we close below this, maybe a few hundred points we could come down, but we should also understand that we have rallied pretty nicely, probably around 18 to 19% with a very short period of time. Now, let's have a look at the Bank Nifty. Now, Bank Nifty was one index which was showing immense strength even in today's fall. If you can see today's closing, Bank Nifty is just down by close to 1%, 1.13%. If you check metals, 2%, auto pack, almost 2.71%. IT is a major laggard over here, thanks to weakness in the American markets. Almost quarter to 4% down, and you can see even real estate is down, even mid caps are down, but banking, it was holding very strong. Let's have a look at the monthly time frame chart of banking index. I think it's pretty clear. Chart is looking very strong. We also have a bullish crossover in MACD. Things are looking great. Let's have a look at the weekly time frame chart. Now, in the weekly time frame charts, things change over here. Things certainly do change. Why things change? Things change over here because the reason is the trend is certainly up. Everything is fine. Even RSI is close to that 70 mark. Everything is fine. We can only see one candle which is showing a shooting star, which is the current week's candle. Now, why is that? There are two reasons for it. First reason is that we are close to that all-time high mark. First reason is that. And generally all-time highs or a previous high is always a resistance. Number two is that I think price is little bit far away from the moving averages. So what I believe is trend is still up. There is no trend reversal sign on the charts as of now. Till now, there is no sign. But there could be a situation in coming weeks or days where the momentum would slow down. The trend would remain up. We could see sideways consolidation. We could see a sudden drop, a sudden rise. But the overall momentum, the speed with which price was rising, I think that could slow down a bit. That is what we need to understand. That is what I can figure out as of now from these charts. Later on, if we have some other development in future, obviously we'll have to change our stance. But as of now, it seems the trend seems to be up, but the momentum, the velocity with which the price was rising will decrease. And the ease of making money, which was there from this point to this point, because prices were rising one way up, I think that will also come down. Now you'll have to be a little bit more careful in terms of your trades. Let's have a look at the Bank Nifty chart. Bank Nifty chart, monthly time frame, no issues at all. Weekly, again, the similar thing. You can see if you compare it with PSU banks, I believe once again, private banks over here had much more momentum thanks to Axis Bank, IndusInd Bank, especially these two banks. Even ICICI Bank, I think, rallied pretty nicely. You can see, again, we have a inverted hammer over here, right? So I think private banks are in an uptrend. I do not deny that, but some sort of slowdown in momentum, or maybe what was happening over here was market was going up like this. Now it could, slant like this, and it would not be that easy. The momentum will basically come down until and unless we do not have a sign on the chart that we could have a U-turn or something. There is no point of, trying to pick a top on the chart, because only God can do that. I am not a God. I'm just a trader. So we need to understand that, and we need to respect price, and we need to strategize our trades accordingly. PSU banking chart, I believe, is if you compare with private banking chart, if you keep aside Axis Bank, IndusInd Bank, ICICI Bank, then overall, I believe PSU banking charts are looking slightly more stronger. Yeah, they are slightly more stronger in terms of state of trend. Monthly chart is also looking much better to private banking chart, I believe. Yes, I do not deny that private banking charts are very close to the all-time high. But as of now, in the entire chart, as of now, I believe PSU banking charts are slightly better placed. Even they will go through a slowdown of momentums, certainly, because you can see this phase was of extreme high momentum. And I think it is required the slowdown of momentum, little bit consolidation, again a move, again a down move. So things will happen. And I think in this sort of period, what I would say is when you are picking swing trades as a short-term trader, you'll have to be little bit more careful in your trades, because you will have to know your sectors very well, rather than just picking any trade, whichever is showing you a breakout in the shorter term charts, you'll have to be very, very careful about which particular sector you are going to pick and which particular stock among that sector you have to pick. All right. Metals. Metals, I believe they have performed pretty decently. They have recovered well from these lows. Although what is happening as of now is there is one small inverted hammer over here, and that is the reason is this particular high, which is coexisting with the 78.6% Fibonacci retracement. Now, is this again a sign of any reversal or something? Probably some consolidation, some sideways move, some profit booking, some again up move will happen. Overall, slowly and steadily, once we close above this 78.6% retracement, then you will see a steady up move happening. But I don't think it will happen very quickly. I'll be very surprised if it happens very, very quickly. All right. Auto pack. Now, I think as of now in this particular market scenario, one needs to be very, very vigilant and need to have watch on the auto pack. I'll tell you the reason why. See, the trend is certainly up. There is no doubt that we can clearly see prices above the moving averages. Weekly time frame chart, we can see one thing that we are currently at a resistance. There has been only one candle which has been able to close above this particular Fibonacci extension. Only one. Rest all were sideways. All right. So this is a sign of slowdown of the momentum. Now, if you check the daily chart, you can see the way auto pack has gone up over here, and in comparison to that, over here. It has not been one way. It has been one small move, a dip, up move, a dip. All right. So this could continue. And the day we have a little bit more panic, a little bit more selling. And if you see auto pack stocks hitting this particular band, this support band, which is between 12,200 to 11,800. I think from here on, you have to be very, very vigilant on your auto stocks, because from here, if you see any sort of bounce, if first of all, if the price comes down, and from here, if we have a bounce, I think it will be a very good opportunity for short-term traders. And one more thing is we will need, if we want to keep Nifty at a higher level, if we do not want Nifty to break that particular trend line, we will need few sectors to take, the leadership. If banking gives up, if banking goes sideways or it corrects a little bit, then again it goes up, which is going to be the sector which will try and hold up the Nifty at higher level. This is what you need to think as a trader. I believe maybe auto pack, if it corrects little bit, becomes a little bit healthy, and then again a U-turn comes, I think auto pack could be one of them. IT, as of now, let me show you the monthly time frame chart. Monthly time frame chart is not looking bad. It is looking okay as far as it is not closing below this support band. Weekly chart is looking pretty dangerous. Weekly chart is looking bad. There is no denying. The reason is selling happening in the American markets. If we close below this support band, I think it could create problem in our Indian markets too. And that is what we need to wait and watch and understand and see what happens. Financial stocks. Financial stocks in the monthly time frame chart, trend is up. Certainly no denying that. In the weekly time frame chart, this is the previous high, and we can see a shooting star candle over here. Overall, I think trend is fine. Trend is up, no doubt about that. As of now, there is no sign also of a reversal. Slowly and steadily, once if we close above this high, I don't think it will happen very, very fast. It might take few days, but once we close above this particular level, then it could be a little bit more smooth sailing for the finance stocks. Pharma pack, I think I'll be very open. Pharma pack has been disappointing. It has been underperforming, and this is the support band which is holding up this entire pharma pack. Once we see a close below this 12,260 levels, I think then we'll see some sort of more downside coming in the pharma pack. All right. FMCG. Again, this is one sector which all of you need to be, very, very vigilant about. The trend is certainly up. You can see trend is certainly up, no doubts about that. And it has been one of the leaders. Weekly time frame chart, if you have a look, what we can see is, do we have a negative divergence? No. At times we need to probably convert the candlestick chart into line chart to cross check whether we do have a negative divergence or not, because when we see with the naked eye, sometimes it does feel that we do have a negative divergence, but it's not as of now. Second thing is what I believe that FMCG pack is a very strong sector, but it is slightly overbought right now. And you can see after this particular run up, this was a vertical run up, not exactly like what happened in banking. It is better than banking. But then what we saw, overall price went up, but the momentum slowed down. The speed slowed down. This is what is necessary in banking. If we also want to keep markets at a higher level, and we also want to continue going higher, even if we are overbought and overstretched in banking, this is what we require. Now, what market will deliver, that is what we need to wait and watch. Now, coming back to FMCG pack, we are at a very, we are close to that support band, not exactly over there right now, because the FMCG pack is trading at 43,180 and the support band starts at 42,588. So this entire band seems to be a decent support because of this previous high and this 23.6% Fibonacci retracement. Within this band, if we consolidate, if we do not give up, if we do not break this particular low, probably some fresh new trades could come up in the FMCG pack. And this is one sector which everyone needs to keep an eye on. Realty pack. Realty pack is looking very good in the monthly time frame chart. In the weekly time frame chart also, it is looking good. Again, there has been a sell-off because you can see overall market has come down across the selling. I mean, the selling has happened across the board. So I think sometimes it does happen when selling is pretty severe, even good sectors come down. And this particular sector was already trading at a previous high. And we have also given a trend line breakout. Now we need to see that, is this going to be a retest of the trend line? And then again, we'll start moving up. Is it the same? I think only time can tell us, because many times it does happen that after a trend line breakout does happen, prices will come down to retest that trend line support, and then again there will be an up move. Right? I think one should keep your eyes open. A trader should keep your eyes open on realty packs, especially for swing trading opportunities. And one of my favorite picks could be DLF, because DLF had gone through a trend line breakout. If it comes back somewhere over here in the zone of 375, 377, and then if you have an up move, you can fancy your chances. Consumption pack. Consumption pack, again, a strong looking sector. In the weekly chart, again, we can see the momentum has been extremely good. Not just the trend is strong, the momentum, because trend and momentum both are completely different thing. So the momentum was extremely strong. You can see this. It has been literally close to 90 degrees rally, close to that, not exactly. Now, once we have hit this particular Fibonacci extension and we can see a shooting star, we can see a high wave candle, a shooting star, it is clearly saying that it is pretty much overstretched. Trend remains up. There is no problem about that. There is no reversal sign as of now, but somewhat slowdown in the momentum is possible. Slowdown in the momentum means, I'm not saying it will crash. If it does, I think we should be very happy, because rather than having a time-based sideways move, a quick down move and then a recovery is always more preferable, right? But I think only time will tell, but possibility is more of slowing down of the momentum and sideways and upside move, again a downside move. So again, over here in the consumption pack, a swing trader will fancy his chances whenever it happens. not otherwise. Mid cap. Mid cap, again, I think so. One of the strong sectors, you can see it has given a beautiful trend line breakout. It has gone through, it has not even come back to retest that particular trend line. Now what has happened is it has been able to close above this resistance. And now this particular same resistance, which was earlier resistance, now has become a support. So if we close below this particular support, which is at 31,442, we will hit one another support at 30,783 or something. And once if we hit this and this zone, anywhere in between, and then if we stop falling, you should be extremely vigilant. You can have multiple trades coming up in mid caps, but selling should stop. Selling should halt over here. We should not see continue follow through selling. Only then. All right. So I hope this entire educational video will help you to understand how markets will pan out in the next few weeks. And in my next coming videos, I'll again try to share something even more interesting with all of you. Stay safe, trade well. Thank you.